In this video, I really just want to talk about how you should be managing your portfolio in the event of a market crash, how I'm managing my stock portfolio, what stocks I'm kind of looking at, and just how the economy is overall doing. So if you enjoy this type of content, make sure to subscribe, yada yada. Not going to waste your time with that. Let's go ahead and get straight into it. So looking at a bunch of different factors, we can tell. We know that the S&P 500 has not been doing the best. Over the past 3 months, it's down 4.3%, and over the past month, it's down 6% alone. Now, looking on some other factors like SPY growth stocks have been hit very hard. They're down 8% over the past 3 months, and over the past month, they're down 8.3%. Growth is being hit the most because the economy is rising interest rates, which is not necessarily the best thing that you want to see when it comes to buying a growth stock. High interest rates and growth stocks do not do that well together. Looking on SPY value though, value investing is where I am trying to put my money at the current time. And I'll show you guys some notes later in this video to give you everything I'm doing with my portfolio. But value investing is the way to go in my personal opinion. Over the past month, they are down 3.3%, but it's nothing like 6 or 8% that we're seeing right now. And the dividends that value stocks often pay can help outweigh and kind of unbalance these negative returns that people are experiencing. But another thing to keep in mind is that these 3x leverage ETFs are taking insane losses. It's down 47% over the past 3 months, and this past month it's down 33%. So I think it's really risky, just in case, to try and go invest in leveraged ETFs because you're expecting big gains because they've fallen. It could continue to fall, and just be aware that it is a very big possibility. Because if you go ahead and you look at what happened at COVID, here is this ETF. It was at 73 bucks right before COVID, and then after everything with COVID happened, it went all the way down to $11. It's a very, very big drop. So let's go ahead and talk about how to manage your stock portfolio for a crash and for a recession. So the first thing I want to stress is please keep cash and buying power in your portfolio. Now remember, everything I say is not financial advice, but I really don't think it's necessary to hold more than like 5 to 10% cash in your portfolio, because you want to make sure your money is invested and it's not just sitting around. So it's important to keep cash, because I use that cash and I buy stocks, I buy ETFs and different things like that on red days. Now I'll show you M1 Finance, but M1 Finance has great benefits. If you want to use M1 Finance for easily buying stocks on red days, you can buy a bunch of stocks on a single day. Sign up using the link in the description or the pinned comment down below. It'll say M1 Finance. Just sign up with that link. If you deposit $50, you will get $50 back. So you're literally getting free money for investing. That's incredible stuff. But what you also want to do is buy in periodical amounts. You don't want to buy stocks all at once. I think that's important, because what if we have a red day where we fall 3% and you buy some stocks, but the next day it falls 10%? You want to be able to buy on all of the red days. And then another little key tip is that utilities and consumer staple stocks usually perform well in times of a recession, because they're consumer needs and it's what kind of keeps people going. People need these things, but they don't need like luxury goods. So utilities and consumer staples usually do perform well in times of a recession. And next up is I'm not selling my stocks right now. I only will sell stocks when the time is right to sell, for intrinsic reasons and not extrinsic reasons. Like, what I mean by saying that is, I'll sell a stock because the company has made me a reason to sell the stock. Maybe the stock I bought at 25 and I expect to sell at 75, it hit 75. I'm not selling my stock because, interest rates are rising and it could affect this company. I'm selling for not because the market's weird, but because my stock has hit its price target. And so here is exactly how I am managing my portfolio for this economy and market. I'm more focused on buying value stocks, which can pay dividends. They pay growing cash dividends and they're consistent on their dividend payments. I'm focusing on dividend growth investing with a few high yield stocks and ETFs. I do like to buy ETFs on like red days and different things like that. Especially like my Roth IRA is consisted of all ETFs. And then a few growth stocks that I have strong conviction on and I believe on our current great deal in the markets. And if you're going to go be buying growth stocks, make sure they're good companies and companies that can strive in a kind of high interest rate economy and still have huge potential for gains. And lastly, I'm keeping cash on the side for red days to buy as much as I possibly can. In the M1 Finance, the portfolios, let me just show you this real quick. So take, for example, this is my dividend stock portfolio on M1 Finance. And like I said, use the link in the description below if you want to use M1 Finance. Deposit $50, you'll get 50 free dollars. It's free money that they're handing out right now. You can take that money out, do whatever you want with it. But what I'm saying is, I have 25 holdings in this portfolio. I have stocks in the tech and cloud computing, like you'll see right here. I have Microsoft, Apple, Broadcom, different things like that. And I own REITs, I own some ETFs. You can see right here, these are where my high yield comes from, like JEPI, SCHD. XYLD is a really high yield, so is QYLD. And what I do is I say, okay, here's how much of it I wanted to take of my portfolio, 35%, 20%, all these different things. On M1 Finance, whenever I just go to buy, I'll hit the buy button. I'll say, maybe I want to buy $500 worth of stocks. That $500 will be automatically spread out amongst all of these stocks instead of me having to go one by one and buying each stock individually, like if I had Robinhood or TD Ameritrade or something like that. That's why I love M1 Finance. And on red days, I'll just buy a couple $100 worth of stocks, sometimes 1,000, if it's worth it. And it's the potential is just so good. Even if you're only buying $10 worth of stocks, it's better to buy $10 worth of stocks than it is to buy $0 worth of stocks. So keep that in mind. But everybody, that's going to be it for this video. So if you did enjoy it, make sure to subscribe to the channel, turn on post notifications so you don't miss out on any future videos. Check out M1 Finance if you haven't already, like I said. Thank you for making it all the way to the end of this video. Check out my Udemy investing courses if you want to. Link's going to be in the description or the pinned comment down below. Again, thank you for making it to the end, and I will see you at the next video.